Mayuresh, the question which we are debating, deliberating and discussing is that do we have a durable trading bottom in place for the market now? And it will take a lot of global bad news or local events to break that recent low.
Afternoon, Nikunj. I think we have been analyzing a lot of aspects, including how the gap between the bond yields and the earnings yields have probably panned out over the last 10 to 15 years. And in terms of this narrowing of spreads, we are below the long-term averages. So to a certain extent, the market is trying to pencil in that earnings should start reviving at some point of time as we head into the first half. Both as a combination of better monsoons aiding rural recovery and consumptions improving because of the tax cuts that we've probably seen. So base case scenario getting worked out that the first half of the next financial year, earnings should start bottoming out, reflecting in probably the spread narrowing as well. The second aspect obviously has been in terms of the previous and the past corrections as well. And the periodicity of this correction, obviously, I think from oversold zones, we've probably come back to a large extent. But to a large extent as well, I think all the previous falls that we've probably seen, the kind of battering that has happened across the small and mid-cap space, I think the kind of fall that we've probably seen in terms of price damage, selectively, I think a few pockets within the mid-cap universe have started probably looking attractive. And last but not the least, I think in expectations of Trump tariffs and tantrums as well, what probably happens in terms of global economy, global inflation, core inflation itself, and the interest rate cycle, I think the markets have penciled the worst probably in. And therefore, I think within the emerging pack, India's earnings should start bottoming out. Indian macros probably better than the rest of the emerging economies. And therefore, I think India should do well if the bottom is in place. But it probably looks like a large part of the price damage has already been gestated by them.
Your view, especially on this entire theme, the renewable energy theme, the fact that the government push and the impetus is on that particular domain out and out. What's your take on that, and which stock do you like in that space, if you do, that is?
So two aspects, I think. The intent of the government is obviously there because they need to get the renewable capacity to 500 gigawatts over the next few years. And a large addition of that will be solar. But I think hydro and hydel plants, specifically small hydro plants, might do exceptionally well, in my opinion, again, in specific areas of operation itself. And therefore, a lot of the equipment manufacturers or the EPC players for either solar or hydro or renewable as a space might actually do well. The second part of the equation is also the flue gas desulfurization players. Because as we head over the next few years, and the deadline has obviously been extended till March 26, maybe it gets extended 1 year more. But that's a 1 lakh crore market out there. Only 10,000 crores worth orders have been metered out. Very few players that can actually make this equipment so that the existing thermal plants don't pollute. And therefore, looking at the climate emission norms, I think this segment of the market, along with renewables, specifically the small hydro that I was talking about, can actually do well. So within the FGD players, I think players like a Techno Electric, as an example, has a good mix in terms of FGD equipment, smart meters, and therefore they are in the right spaces as far as government capex layouts is concerned. Obviously, I think with the correction that we've probably seen, would like them to make good sound bases. So I think these two spaces might actually do well as far as energy as a space is concerned over the next 3 to 4 years.
Mayuresh, there's a debate which says that everything which moves on wheels will be electric. There's a debate which says that everything in future will not be EV. Maruti is saying that I will do hybrid. Mahindra is saying that I will still roll out EV. Who will be the winner in this entire EV space? I mean, there was once upon a time we thought Ola is the ultimate EV company. Today it's gone to 45 rupees. There are so much of yes, no, I don't know in the entire auto EV space. Who will be the winner?
So Nikunj, honestly, I think over the next few years, electric will dominate. At what time periodicity, I think very difficult to say. I was going through a global auto report, which is probably seeing signs of stagnation probably happening, even as far as the electric market is concerned, whether it's Europe or even North America to a large extent. And therefore, the adoption, obviously, with respect to pricing, with respect to infrastructure, largely related to charging of these vehicles, and the changes that happen in terms of both batteries as well as the powertrains, as far as electric vehicle platforms are concerned, are going to be very, very evolving. So I think the kind of R&D spends that have been done and are being done, I think there will be significant amount of incremental capex that will keep on as technologies evolve. Having said that, I think specifically for a market like India, I think we're still evolving as a space. And like power, where we're not directly going to go into renewables over the next few years, thermal will still stay put. Even for automobiles, I think the electric engines will obviously take precedence over the next few years, but that will be restricted to certain urban pockets. In semi-urban and rural areas, I think it will still be the internal combustion engines, the petrol and diesel cars that we are talking about, of the hybrids, that will come to the fore. And therefore, I think a stock like Maruti, just as an example, which probably has a clear-cut advantage, both in terms of creating hybrids, in terms of electrical mobility platforms as well, and the internal combustion engines with very, very attractive price points, the dealership network that they've got, the service stations that they've got, and after-sales service as well, might actually benefit in the Indian ecosystem. So whether Tesla comes in, I think certain urban pockets might do well, or the M&M launches that you've probably seen. But consistency over the longer period of time, I think Maruti has the right mix, in my opinion, to cater to all these segments over the next few years.
Jubilant Food works. Why it is that you never told our viewers to buy Jubilant Food works? Just buy a pizza company and keep it. 24 times in what? 15 years? 24 times.
No, I think there have been phenomenal moves, Nikunj. I think no two ways about it. But I think the important crux now here is that the changes are happening very, very fast and are evolving very, very fast as well. So I think the modes of delivery are also going to be very, very important as far as a lot of these consumer chains, consumer discretionary products.
Minimum 5 years, but the condition is that it should be at least 3 to 4x in 5 years. That's a reasonable time frame, right?
Sure. I think I'll hazard a guess here, Nikunj. So I think Kotak Bank, out of the large names, our take is that there should be decent growth that probably happens as far as banks and financial institutions are concerned. And in our own estimates, Kotak can actually deliver significantly as far as most parameters that banks normally do. So whether it's advances growth, reasonable amount of deposit growth, stable NIMs, asset quality and credit underwriting should be top notch. And again, I think in terms of the return ratios should be right there at par with the best banks in the world. So our own sense is that Kotak might actually deliver phenomenal numbers over the next few quarters and years. That's the large cap name that we probably like in terms of ratings and rankings. Out of the mid cap space, I think Welspun Corporation is something that we continue to like over a longer period of time. I think two reasons out here. One, I think in terms of the core business itself, they are among the top three globally as far as the line diameter pipes are concerned. The kind of capex that will go in, whether it's North America, whether it's the Middle East, or whether it's India specifically for oil and gas, whether it's for sewage treatment, or whether it's for water, I think a large part of the capex is going to continue for the next 3 to 4 years. And therefore, the incremental order book that they probably set out at around 15,000 odd crores should keep on improving in every passing quarter. Again, the margins I think that should show significant amount of operating leverage. And therefore, with the opportunities coming their way and the operating leverage that they probably create, the return ratios should be significantly higher every passing year. So our sense is that macros and micros, both locally and globally, should probably support Welspun.
So point taken. Those are some of the counters that are looking attractive for the next 5 years, according to Mayuresh. But thank you so much, Mayuresh, for joining us on the show and giving us sharing those topics of yours, as well as talking about the markets.